Good morning, Trade Pros. Good morning, YouTube. Hope you guys are having a great day. I'm Fadi from the Trade Pro team here with another market update for you guys. Hope you guys enjoy it. Let's kick off this market update with some of today's market news. In Asia, Japan is up 0.5%, Hong Kong is down 0.6%, and China is up 0.2%. In Europe, midday, London up 0.3%, Paris up 0.4%. As far as the future market here in the US, Dow is up 0.2%, S&P is up 0.2% as well, Nasdaq up 0.4%, and crude is down 0.2%. As far as the economical calendar for the day, at 8:30 we had housing stats and permits, which pretty much doesn't impact the market. And at 1 p.m. today we have Fed Bowman's speech, and that's about it. Pretty much like no news for today's session except for the earnings. The earnings is really the big news that is headlining that period today in the market. And the last couple of days, yesterday we had a really strong rally in the S&P towards the close on the back of a strong earnings for Q1, stronger than expected for Charles Schwab banks and a bunch of other banks as well. Read you guys some of the comments here. Uh, Okay. Earnings season is heating up this week with investors shift their focus from banking to other sectors of the economy. U.S. indices closed higher on Monday, stronger than expected on Charles Schwab, outweighed fee revenues and shrinking deposits. So basically, like within the last couple of days, we've seen a lot of regional banks, a lot of big banks as well. We still have J.P. Morgan, I believe, on Friday. This is going to be the last big bank to report earnings, and all of those were upticks higher than expected earnings. So the banking sector has been really performing well despite all the other expectations. The prior earnings recession started in 2020. Q2 lasting 3 quarters from start to finish. Today's earning recession may also last 3 quarters. If analyst expectations turn out to be correct, analysts have to lower the bar heading into earnings season by downgrading Q1 estimates. So basically, what this article is saying is that the banking sector has still outperformed, at least the ones that have reported already, but there's still a long way to go as far as inflation. That's kind of like all the analysts have been talking about the last little bit. And other news though, coming from Apple and Nasdaq plans to pivot to India. They're starting their own new manufacturer in India, and that's also, I think that might impact the stock. We'll see how the stock behave after the open, but Apple plans for a pivot to India can be seen by CEO Tim Cook visit to the country, which is quickly becoming the tech giant's most important manufacturer base outside of China. Cook is set to open up the country's first Apple store in Mumbai today, followed by a second one in Delhi on Thursday. After saying he was very bullish on India on last quarter's earning call, you know, 700 million smartphones users in India. So that I think that will impact the stock very well. We'll see how they act today after the open. But basically, Apple is exploring more into the Indian market rather than the China market. So very interesting here as far as that stock as well. New news coming from EV, new regulations pretty much that the government has set on the EV sector. Treasury Department rules that go into effect today will reduce the number of electric vehicles that qualify for the full federal EV tax credit. So, as you guys probably know, EV has a lot of benefits. Not just to the car, but as far as of tax credit as well. I think you get a $8,000 or $9,000 tax write-off from buying an EV car. And basically, what is happening is that the government has ruled out some names, depending on the hybrids and some other cars, and ruled those out from that tax, bracket. So cars that will qualify for the $8,000 tax credit include the Chevy, GM, Silverado, Chrysler, Ford F-150 Lighting, as well as 6 other models. Some other automakers like Raven didn't make the cut, but that can also seem to help small startups for EV like Lucid Group and FSR. And yeah, this is also interesting because that will put some weight on certain cars that will, pretty much have that tax advantage to them, and it will also eliminate some of the competition that are fell out from that tax bracket. So yeah, those are pretty much the headlines for today. Pretty much earnings is the big news that everybody's looking for. As far as the S&P, I'll give you guys some levels and what to expect. Towards the close yesterday, we seen this really strong pivot from that 41.49, 41.50 area, and we just rallied endlessly to the upside till the end of the session and to the overnight as well. Right now, we're trading 41.90, 41.95, I believe. We're breaking the top of area of distribution and entering into a new area. So very interesting here on the S&P to see like a strong rally like that at the sorry, at the end of the earnings season. And yeah, I honestly I think today we get a pullback in that, or we chop around this price action, basically rotate in the same place for a while. We'll see what we get because tomorrow we have Tesla reporting earning, and on Friday I believe also we have JP Morgan, and those are the two big players that I think the market are waiting to see how their earnings looks like. If you're trading today, I really recommend just looking for pullbacks, staying on the safe side. I like the low 70, mid to low 70 area for a deeper pullback if you're trying to get on this rally. If you're trying to fade this and go short in this market, I really like the level 4200, 4205. You have a key ledge towards that region. And if you're trading, I think that's like a decent area to lean on for a short. We'll see how we do today. I'm gonna go jump into these live rooms, and I hope to see you guys there. Take care, everyone.